Friday's trading did throw up a couple of new surprises, with commodities and equities moving in slightly different directions. US equity markets declined, and this was a result of some further indecision about the Japanese earthquake, as well as further tensions coming out of the Middle East. But commodity prices did increase. Typically, we have been seeing commodities and equities move in the same direction, so it was a surprise to see them move in slightly different directions on Friday. Oil prices have lifted, and cotton prices are also looking pretty strong. Over the next 6 weeks will be the US earnings seasons for the last quarter that has just been. We have been picking that US companies have been making pretty good money, and this is likely to continue, and if this does, we'll see further increases for equity markets, but also further appetite for commodity currencies. The New Zealand dollar has been trading very strongly against the US over the past 2 weeks and remains that way on Monday morning. We start the week trading at 78.30 against the US, and we're trading even higher than this over the weekend. This has been a result of strong commodity prices around the world, and this has driven to higher levels for both the Australian and the New Zealand dollar. In fact, the Australian dollar reached all-time highs once again over the past couple of days, and this was also based on the fact that we could see further interest rate rises out of Australia. If this does happen, many are picking that we could even see the Australian dollar at 1.1 against the US dollar down the track. If this does happen, the Kiwi will also go along for the ride. So at this point in time, there is a risk that we could go even higher than where we are currently sitting. With the New Zealand dollar trading over 78 cents against the US, this has limited further increases for local New Zealand beef schedule prices. This comes despite the international situation looking pretty good at the moment. US prices remain high, around 50% higher than what they typically would be around this time of year. Supply is low, and they are looking for additional product to come to market, which New Zealand could potentially fill as more cows come into the schedules. The outlook over the next 6 months continues to look good, with US prices expected to be fairly high. However, the high New Zealand dollar will limit those gains back to New Zealand farmers. I'm still picking that the spring trade will be very good back here in New Zealand.